Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, over the weekend, a lot of drama and action happening across the globe. Of course, banks are looking to be in big trouble across the globe. Multiple banks have been now suffering and collapsing in the US, and of course, the latest one being from the Europe, also that is a Credit Suisse. So, now what happened over the weekend is something that we need to discuss, and of course, what happened on Friday is also important to note. So on Friday, we could see the Indian market kind of stabilizing and opening with a gap up, and after that falling for the first half, and by end of the day, a short covering rally upwards. So market did close above 70,000 again, but then of course the market does not still look great. So over the weekend, a lot of things happened. In fact, the Credit Suisse, which was a troubled bank in the Europe, so has received some support in terms of UBS agreeing to purchase the Credit Suisse bank. Now, one thing that we need to understand here, it was an overnight decision that came in yesterday, and on a Sunday, on a holiday, and Credit Suisse is being taken over with support from the Swiss government. Now, one important thing to note here was that this acquisition is being done without even going through the regular procedures of taking shareholders approval, because of course the action was so quick, and thing is it's kind of more of a forcible purchase which is done through the UBS, and UBS has been given a lot of support by the government, saying that any losses to a certain extent will be supported by the government, and also that they will be giving a good amount of fund in terms of liquidity for the Credit Suisse bank. So this is kind of more of a forcible acquisition. That is one thing. Of course, UBS is getting at a valuation which is much lower than the market price for Credit Suisse. But then this is something like a Pandora box. You don't know what is inside, and you just got something, and you are yet to understand what's happening with the bank, because Credit Suisse is not something that collapsed overnight. Credit Suisse has not been doing well at all for quite some years. So it is not that it is just because of the interest rate that Credit Suisse is kind of doing bad, but it is also something else which is not really clear. So right now probably the government wanted to stabilize things in the market, and that's why there was a forcible action here. And if you see, there was more of a coordinated reactions by central banks across the globe. So it was not just in Europe, in the US. So probably it was more of a coordinated, officially also it is now announced that it was more of a coordinated action by the central banks across the globe to support the banks right now in such a situation, so that they want to bring more stability into the market. But then, is this going to be a big positive? Okay, now let me tell you, today morning when I was looking at the Dow futures, it was up by almost 180 points. But then if you look at SGX Nifty, that also was kind of up by almost 50 points. But from there, it has started going down. So if you see, as of now, SGX Nifty has come down by almost 109 points after going up. So what I feel is that this kind of support that has come to Credit Suisse is not really very well appreciated by the market. So if I also look at Dow futures, which was up by more than 180 points, is now just at 61 points plus. So that means Dow futures are also coming down. So that means that enthusiasm in the market is still not there. Now, one thing that we can expect is the market in India to kind of open flat to slightly negative today. But then, again, looking at the important support, 17,000 being broken multiple times, there are chances 17,000 is broken again. But then it is very important to see how the European markets open today, because European markets, which open in the afternoon, would decide more of the direction, because right now the focus would be on in Europe than US. So that is one factor to be taken in. So how are the investors of Credit Suisse and UBS going to handle this kind of system? Is the shares, of course in the aftermarket hours, both of their shares actually went up. But after the market actually opens today in the Europe, what will happen to UBS and Credit Suisse shares is some important point that needs to be focused on. So let us see how that can take a turn. So major focus, like I told you, in the afternoon. So let us see how the effect of that can be seen on Indian market also. So how Indian market closes today is a very important data to be looked at. If Indian market is closing in the positive, there are high chances, and if the European market also closes in the positive, there are high chances that we are somewhere close to the bottom. But if not, there are chances of the market falling further. So that's why I said, there can be chances of pain further. But let me tell you one important thing. All these problems are specific to Europe and US. India and Indian banks are in much, much better situation compared to all these banks. So I don't see any reason why we should be worrying about here. So of late, what happened when Credit Suisse news came out, naturally a lot of Europeans tried to pull out their funds from Credit Suisse. And that became a liquidity issue there. So there was no fund available, and now the government is supporting. So all these things are all problems which is more related to these countries where the interest rates already were too low. But Indian market is not like that. We are a market which was a developing country, and being a developing country, the interest rates were already higher in India, and now it is slightly higher more than that. So it is not such a big factor, and moreover, Indian governance of banks are much stronger than other banks is what I would say personally. So these are few things which can actually keep our market kind of more stable. But then of course the global fears are going to be seen in Indian market. The effect will be seen in the Indian market. So it is not that European markets are down and US market is down and India will continue to go up at this point of time. No. So that fear is definitely there. So definitely that is the reason Indian bank stocks are also being punished. But then I only look at it as an opportunity for buying. So that is something that I am doing. And let me tell you, this is not a recommendation. So do ensure that you have a proper risk management in place before investing into any stocks directly. So apart from that, if you look at the markets right now, Japan is down by almost 231 points, that's 0.85%. And Shanghai is up. So, and we can also see Taiwan is kind of flat. Hong Kong is down by almost 2%. So Korea is down by 0.29%. And this is kind of, and Australia is also down by about 0.89%. So it's a mixed reaction right now, I would say. So Hong Kong is down, China is up, Korea is down, Japan is down. So most of the Asian markets, if you say majority, are still down. So that means this Credit Suisse takeover has not been accepted very well by the investors in Asian markets at least. And now focus will be on how the European markets react. So let's see how things go. And this week, one of the most important things to be looking at is, of course, the monetary policy meeting at the Federal Reserve in the US. So the details of which will be coming out on Wednesday evening. And of course, volatility is going to be on the peak till then. And the effect of that can be seen on Thursday. That is our expiry this week. So I am not personally taking any trades as such for this week because the market is expected to be really volatile. And it's better to sometimes not take a trade also to kind of stay away from all the uncertainties in the market. So that is my take for now. And apart from that, if you look at the important levels to watch, I would say 17,000 is now again a decent level to be looking at, but not a very strong support now. But the next important support would be expected at 16,850. And 16,800 could be an important support. I am expecting the market to expire this week within the range of 16,800 to 17,300. But then, of course, in between, because of volatility, we might see the market going higher than these sides. But then, finally, the expiry might happen within this range. This is what I am expecting. So volatility is definitely going to be there. So be careful when you're trading if you are trading. But otherwise, I would advise not to trade unless you're an expert in the market. So that is one important thing to be looked at for this week. So like I told you, first thing, look at what is happening in the European market today afternoon. Second thing, look at what is going to happen at the Federal Reserve monetary policy meeting. Now in Federal Reserve monetary policy meeting, there are high chances the interest rate might be hiked by just about 0.25 points. If that happens, the market may not react much. So we might see as an ornament. But if the interest rate is hiked by 0.5%, but the chances are very low, then there are chances the market can actually fall further. But if at all, by any chance, the Federal Reserve actually thinks that the market is, already troubled, so let us not increase the rates anymore, then that would be like a big surprise. And if that happens, of course, again, less chances of that happening. So if that happens, market can see a big short covering rally. So that is exactly why we could expect a big gap up or a big gap down on a Thursday. So because of which, a lot of traders can get into trouble. That's exactly why we are avoiding a trade on this week. So That's it for this day. Of course, a lot of things I will discuss. I think it's gone slightly longer. The time right now, I think it's slightly more. Okay, so I think it's time to get going for the day. Wishing you all the best for the day and the week. But one, of course, thing that I would be doing is, of course, adding some good stocks when I see an opportunity. So that's something I would do, and of course, sharing it in the community. If you're not a part of the community, do join the community free of cost. All you need to do is contact our team on the number mentioned below, and our team will help you join the community. So that's it for now. Wishing you all a great day. But before we leave, do remember to press the like button and do consider subscribing to the channel if you want to stay updated about the market and what we are doing as a community to grow financially. Goodbye. Have a great day.